The inflation rate rose to 2% in October, casting doubt on the chances of a major rate cut in December. Stats Canada says the consumer price index rose 2% on a year-over-year basis in October. It's a noticeable but expected increase from the 1.6% increase reported in September. Grocery prices rose at a faster pace for a third consecutive month, increasing by 2.7% year-over-year in October. Well, joining me now is Pedro Antunes, Chief Economist at the Conference Board of Canada. Pedro, thanks for your time. So our inflation rate jumped back up last month. Walk us through the mechanics of why, and was this expected?
Well, it certainly was expected. We know that in September we had a big decline in inflation that was due to essentially gasoline prices were a lot lower in comparison to where they were a year ago. And we knew that those gasoline prices now in the month of October would be a little bit higher than, in other words, we're getting less of a decline associated with lower gasoline prices. So there was some expectation that we'd get back up closer to that 2% mark. What's, I think, a little bit disappointing for the central bank is its measures of core inflation have ticked up as well a little bit. And we know that wage inflation is still quite strong in Canada in the last reading from the Labour Force Survey that Statistics Canada puts out. So domestic pressures on inflation are still very much there. And I guess the other concern for the bank will be around the weakness in the Canadian dollar that we've seen recently, which adds to the cost of import prices, essentially.
So help us understand exactly what this all means for the Bank of Canada's decision, which is out in December 11. How will this data affect this? And what other markers are they looking for before December 11 to decide whether or not they'll make an interest rate cut?
Well, I mean, obviously the bank is kind of trying to keep track of everything that's going on. I think there's a number of things that suggest that the bank will be perhaps a little more prudent going forward in terms of not declining as quickly as it has. We saw a 50 basis point decline at one point. I think we're probably going to see a 25 basis point decline in December. And that's because a lot of these indicators, there's mixed signals. So we have seen, in fact, what we're just talking about today, inflation up a little touch. We have seen real estate markets, essentially resale activity coming up a little bit in the last reading as well. But on the other hand, when you look at the economy overall, when you look at essentially our GDP performance or employment performance, that's been rather weak. But the final piece, I think, is the weakness in the Canadian dollar. The fact that interest rates are holding up a little more in the U.S., that puts pressure on the Canadian dollar. And I think that's something that the bank will watch for in this next announcement.
So 2% inflation is the Bank of Canada's target. But we talk a lot about cost of living and how it's noticeably, when you go to the supermarket, when you go to the grocery store, prices are noticeably more expensive than they were at the same time last year. People remember a time when they were a lot cheaper. In your opinion, though, with this 2% inflation, are we beyond that point now where we're noticing these huge increases in grocery prices and the cost of living?
Yeah, I think it's important to understand that when we talk about inflation, that's the price of goods and services as they move going forward. It doesn't mean that we're going to see a reduction in prices from the big increases that we saw over the last 2 years. So just like everyone else, when I go to the grocery store and I look at the price of a steak, for instance, that's gone way up, it doesn't mean that that price with lower inflation is going to come down. It just means that it's going to keep rising at a more modest pace than what we saw in the prior 2 years. So the cost of living has been eroded by 2 years of very high inflation. Well, the good news, I guess, is that we are seeing wages catching up, and in a way, we're seeing purchasing power for a lot of households catching up to that big price increase, or those big price increases that we've unfortunately had to deal with.
All right, Pedro Antunes, for those of us who are not economists, we appreciate you helping us to understand this issue today. Thanks so much for your time.
It's a pleasure. It's always a pleasure.
Pedro Antunes is the Chief Economist of the Conference Board of Canada.